Neobanks have a 40% churn rate. Did you know that? While your board worries about competing with Chime and Varo, those same neobanks are hemorrhaging customers faster than they can acquire them. By the end of this video, you'll know exactly how one community bank in Texas turned that weakness into their greatest competitive advantage and grew deposits by $18 million in 14 months by targeting defectors with surgical precision. Here's what nobody's telling you about the neobank threat. Yes, they're fast. Yes, they have slick apps. Yes, they've captured 23 million account holders in the last 3 years. But here's the part your strategy consultant missed. Nearly half of those customers leave within 18 months. They come for the speed and leave because of the gaps. No local support when their account gets frozen. No relationship when they need a car loan. No human being to call when fraud hits their account at 2 in the morning. The institutions we work with across Texas and the broader DFW region are starting to recognize something powerful. Neobanks are doing the expensive work of customer acquisition, then handing you their best customers on a silver platter when the honeymoon ends. The question isn't whether you can compete. The question is whether you're positioned to capture them when they're ready to come back to real banking. Let me make this concrete. The average neobank customer is 28 years old, digitally native, and has $600 more in monthly deposits than your average checking account holder. When they churn out, and 4 out of 10 will, they're not going back to brick and mortar because they miss waiting in line. They're looking for something specific. A bank that combines the digital experience they got used to with the stability and services neobanks can't provide. If your digital banking platform still feels like Fiserv Premier from 2012, or if you're Jack, Henry Core is running interfaces that require 3 clicks to do what Cash App does in 1. You're not even in the conversation. These customers don't downgrade their expectations. They just pick a different bank. Here's where most institutions get stuck. They see this opportunity, but they're trapped in the 2-year roadmap with their core provider. Maybe you are on Fiserv, and the API you need is in the next release cycle. Maybe you're on Jack Henry and the integration you want requires a systems overhaul. You can't budget until 2026. Or maybe you're on FIS and you've been told the digital banking upgrade is bundled with 3 other modules you don't need. These 3 providers serve 70% of U.S. banks. Their infrastructure powers everything from your deposit accounts to your lending workflows. They're not the enemy, but their timelines are killing your competitive position. While you wait, Chime churns out another 100,000 customers, and your digital front door stays exactly where it was 2 years ago. Let me tell you about Patricia Morrison. She's a chief experience officer at a community bank outside Fort Worth. 72 branches, $1.4 billion in assets, solid reputation in commercial lending. Patricia had the same frustration every executive watching this feels. She knew neobank customers were churning. She knew her bank offered better products, deeper relationships, real lending capacity, but when she looked at her own digital account opening process, it took 11 minutes and required a branch visit to activate. She wasn't competing. She wasn't even in the same game. Patricia brought this to her executive team, and the response was what you'd expect. Let's wait for the core banking upgrade. Let's see what Fiserv releases next quarter. Let's form a committee. Patricia had heard that for 3 years. Then she met Marcus Chen. Marcus is an AI business strategist who works with institutions navigating exactly this gap, the space between where your core banking system ends and where modern customer expectations begin. Marcus showed Patricia something on his tablet that changed everything. He pulled up a dashboard tracking neobank defection patterns in her market. Real-time data showing when customers were closing Chime accounts, what they Googled next, which banks they researched. The data showed a spike. Nearly 4,000 neobank customers in her region had searched for local banks with mobile deposit and instant transfers in the last 60 days. Patricia's bank wasn't showing up in a single search result, not because they didn't have the capability. They did, but because their digital messaging, their SEO, their account opening flow, all of it was invisible to this audience. Marcus asked Patricia one question. What if you didn't wait for the core upgrade? What if you built a digital wrapper around your existing Fiserv infrastructure that could deliver the neobank experience on the front end while your legacy system handled the heavy lifting on the back end? Patricia had always thought of digital transformation as rip and replace. Marcus showed her it could be modular. They started with account opening, built a streamlined digital application that connected to her existing core through APIs Fiserv already supported. Went live in 11 weeks. Then they rebuilt the mobile banking experience, not by replacing Jack Henry's interface, but by creating a modern skin that made the same functions feel native and intuitive. 6 months later, Patricia's bank launched a campaign targeting neobank defectors. The message was surgical. Tired of app-only banking? Get the speed you're used to, plus the services you're missing. They ran geo-targeted ads and zip codes with high Chime and Varo penetration. Offered instant account switching, mobile deposit, and something neobanks couldn't touch: local mortgage pre-approval through their loan origination system Abrigo, which gave them a 48-hour turn time on residential lending decisions. In 14 months, they added $18 million in deposits from former neobank customers. Average account balance, $4,200. Retention rate after 12 months, 91%. Patricia didn't wait for a 2-year roadmap. She found the gap neobanks couldn't fill and built a bridge directly to it. Here's the part that matters for you. This isn't about having unlimited budget or replacing your entire stack. It's about identifying the one friction point that's costing you the most opportunity right now. For Patricia, it was account opening and mobile experience. For you, it might be digital payments integration or loan origination speed, or the 3-day hold you still have on mobile check deposits that makes customers feel like they're banking in 2008. Marcus helped Patricia run a simple diagnostic. Map every step of your customer's digital journey and compare to what they just experienced at a neobank, wherever you're slower, clunkier, or require a phone call. That's your leak. Here's what I want you to do this week. 1 action. Open your own bank's mobile app and try to open a checking account as if you were a new customer. Time it. If it takes more than 4 minutes or requires any step that isn't on your phone, you've found your gap. Then call your core provider, whether that's Fiserv, Jack Henry, or FIS, and ask them one specific question. What APIs do you currently support that would let us build a faster digital onboarding experience without a core replacement? Most banks never ask that question. They assume the limitations they've lived with are permanent. They're not. The institutions winning this fight are the ones who stopped waiting for permission and started building around the constraints. Neobanks are churning customers at 40%. Those customers are looking for a home. If your digital experience doesn't meet them where they are, they'll find a bank that does. The gap is closable. The window is now. The businesses that survived the next 3 years all did one thing. Next video reveals it.